everyone, welcome to the market opening bell on Monday, November 10th, your 10-minute guide to the stock market. Last week, the Hang Seng Index fluctuated between 25,496 and 26,490 points, lacking clear direction, with a high-low range of less than 1,000 points. On Friday, the Hang Seng Index opened 135 points lower, then expanded losses, dropping as much as 318 points to 26,167 and closed down 244 points or 0.9% at 26,241 points. The Hang Seng Tech Index closed at 5,837 points, down 106 points or 1.8%. The X-Share Index fell 88 points or 0.9% to 9,267 points. Market turnover was 209.6 billion Hong Kong dollars. Southbound funds net bought 7.523 billion Hong Kong dollars of Hong Kong stocks. Among them, net bought include Xiaomi at 966 million, CNOOC 763 million, Hua Hong Semiconductor 605 million, Xpeng 363 million, SMIC 155 million. Net sold include Tencent at 470 million, Alibaba 361 million, Kuaishou 294 million. Statistically, southbound funds have net bought Xiaomi for 8 consecutive days, totaling 5.194 billion Hong Kong dollars. For the week, the Hang Seng Index rose 335 points or 1.3%. The X-Share Index up 1.1%, the Tech Index down 1.2%, marking its second consecutive weekly decline. Technically, the 10-day, 20-day, and 50-day moving averages of the Hang Seng Index are converging, still trapped in a range-bound pattern. This week, China will release credit data and the Troika economic indicators, plus earnings from major tech firms like Tencent and JD.com, which are expected to significantly impact the market. Mainland Asia's 3 major indexes opened down 0.3% to 0.7%, then traded mixed. The Shanghai Composite closed down 10 points or 0.3% at 3,997. Shenzhen Component down 48 points or 0.4% at 13,404. Chinex down 16 points or 0.5% at 3,208. Total Shanghai Shenzhen turnover was 2.2158 trillion yuan. For the week, the Shanghai Composite was up 1.1%, Shenzhen up 0.2%, Chinex up 0.7%. The renminbi central parity rate against the US dollar was raised 29 pips to 7.0836. China October total imports-exports in US dollar was down 0.3% year-on-year. Exports fell 1.1% versus expected, up 2.9%. Imports rose 1% versus expected, up 2.7%. Trade surplus was 90.07 billion US dollars versus expected 96.85 billion US dollars. Chinese exporters have rushed shipments to avoid high US tariffs. This phenomenon has now faded. With the trade war paused for a year, exports will normalize. Amid weak domestic demand, export momentum is waning. China urgently needs to bolster domestic demand, fiscal policy expected to become more supportive. The National Bureau of Statistics reported Sunday that October CPI rose 0.2% year-on-year, up 0.5 percentage points from the prior reading, better than expected, minus 0.1%. Month-on-month gain expanded 0.1 percentage point to 0.2%. Core CPI was up 1.2% year-on-year, accelerating for 6 straight months, highest since March last year. October PPI fell 2.1% year-over-year, narrowing 0.2 percentage points, better than expected, minus 2.2%. MOM turned positive to 0.1%, first rise this year. NBS Chief Statistician Dong Li Juan noted that sustained domestic demand policies plus the National Day and Mid-Autumn holidays were the main drivers of CPI improvement, with policy intensification and ongoing anti-inflation efforts. CPI year-over-year is likely to continue a mild rebound, and PPI decline will keep narrowing. Today's new listing, Softcare, stock code 2698, closed on Philip Morris Great Market last Friday at 35.6 Hong Kong dollars, up 35.9%, or gaining $9.4 from the IPO price. Excluding fees per board lot of 200 shares, paper profit was 1,880 Hong Kong dollars. Speaking of which, let me introduce Philip's exclusive limited time IPO subscription offer. From October 20, 2025 to January 31st, 2026, subscribe via Philip and meet the conditions below to receive iShares Gold Trust shares. Subscription amount between 8 million and 20 million Hong Kong dollars. 5 consecutive unsuccessful allotments will receive 1 share IAU. Subscription amount which is 20 million or more and 5 consecutive unsuccessful allotments will receive 3 shares IAU. IAU is the ticker of US Gold ETF. Approximate worth 1 share is approximately 590 Hong Kong dollars based on November 7, 2025 close. Subscribe IPOs with Philip. Win or lose, you still get a sweet deal. US government shutdown may see a breakthrough. Senate Minority Leader Schumer proposed a new plan to Republicans. US stocks rebounded from lows on Friday. The Dow fell as much as 416 points or 0.9%, then closed up 74 points or 0.2% at 46,987. S&P 500 closed up 8 points or 0.1% at 6,728. Nasdaq's drop narrowed from over 2% to 49 points or 0.2%, closing at 23,004 points. The Nasdaq Golden Dragon China Index, tracking Chinese ADRs, fell 3 points or 0.23% to 8,134. For the week, Nasdaq was down over 3%, Dow and S&P 500 down over 1%. Tesla shareholders approved Musk $100 billion pay package with over 75% votes. The stock closed down 3.7%. Musk took the stage post-vote to dance with humanoid robot Optimus. He said China is expected to fully approve the company's full self-driving FSD feature, currently partially approved, and hopes for full approval by February-March next year. Broader testing is paused pending full regulatory note. Musk also urged European customers to pressure local regulators for FSD approval. Other tech stocks performed mixed. Meta and Amazon up 0.5%, Apple down 0.5%, Alphabet down 2%. AI chip stocks tried to reverse losses. Nvidia fell nearly 5% intraday, but closed nearly flat at $188.15. Palantir up 1.7%, AMD down 1.8%. Reports say the White House has informed agencies it will not allow Nvidia to sell its China-specific AI chip B38 in China. B38 is designed for training large language models. Nvidia has provided samples to several Chinese clients and is modifying the design in hopes the US will reconsider. Nvidia's spokesperson said the company has zero market share in China's fiercely competitive data center market, so B38 is not in earnings forecast. University of Michigan survey. November preliminary consumer sentiment fell to 50.3, lowest in nearly 3.5 years, below October's 53.6 and expected 53.2. Current personal finances and one-year business outlook both worsened. With the government shutdown over 1 month, consumers worry about economic fallout. Sentiment fell across all ages, incomes, and political leanings. but the top third stock-owning group rose 11% thanks to strong markets. One-year inflation expectations rose to 4.7%, up 0.1 percentage points month-on-month, but still far below May levels. Gold surged back above $4,000 on Friday amid a softer dollar and heightened safe haven demand from U.S. shutdown uncertainty. Crude oil fell nearly 2% last week. Our stock pick today is SITC International, stock code 1308. SITC International's business encompasses integrated shipping and logistics services, including container transportation, freight forwarding, ship agency, depot operations, warehousing, land leasing, and other services. Its core business is providing container transportation and integrated logistics services with a focus on the Asian market, as the group believes the Asian market will continue to maintain healthy growth. As of June 30, 2025, the group operated 82 trade lanes, including 16 trade lanes operated through joint services and 25 trade lanes operated through container slot exchange arrangements. These trade lanes and the onshore integrated logistics network cover 82 major ports in mainland China, Japan, South Korea, Taiwan, Hong Kong, Vietnam, Thailand, the Philippines, Cambodia, Indonesia, Singapore, Malaysia, Brunei, Bangladesh, and Myanmar and India. The group's fleet consists of 119 vessels with a total capacity of 185,787 TEUs, including 101 owned vessels and 18 chartered vessels, with an average fleet age of 9.4 years. Of these 119 vessels, 95 are below 2,000 TEU in capacity and 24 are between 2,000 and 3,000 TEU. In addition, the group operates approximately 2.1 million square meters of depots and 180,000 square meters of warehouses. The group recently announced operating data for the 9 months ended September 30, 2025, with revenue increasing approximately 16.6% year-over-year to $2.458 billion. This was mainly driven to a 7.8% year-over-year increase in container volume to 2.749844 million TEUs and an average fleet rate of $754.9 per TEU, up approximately 9.2% from $691 per TEU in the same period of 2024. As global trade patterns evolve, intra-regional trade is becoming more frequent, driving growing demand for flexible and efficient small container vessels. The group will optimize its unique operating model, focus on expanding its service network in Asia, increase route density, extend the value chain of integrated sea-land services, meet customers' stable supply chain needs, and strengthen refined management to reduce costs and improve efficiency. Buy recommendation at 30 Hong Kong dollars, target $33, stop loss at $28.5. I do not hold the above stock.